started the recording now, so I'm going to translate this for a second in English while I'm explaining to you. So most important is our few tips during the trading sessions. First of it is like how big we are going to trade. So most important is that we are going to trade the small harmonic scanner trades first, so short-term harmonic scanner trades and web analyzer trades. On all of those, you can use 0.01 lot per 100 euro. I just muted the rest of the group for a second. If you have any questions, just unmute yourself and ask the question or send message in the chat. And I also know that there's like a raised hand button. You can just raise it and then I will wait for a second and we can answer your questions. Okay, so we are starting with 0.01 lot per 100 euro, which is meaning that if you have an account of 300 euro, you're going to trade with the the grade capacity of 0.03 lots. 500 euro, 0.05 lots, 1000 euro, 0.10 lot. If you're on demo, still keep doing this. If you have a 1000 euro demo account, 0.10 lot is more than enough. So if you have like during the day, what we see is that we always say like keep around maximum 5 trades open. This morning, for some of you, I think Yillis was in our trading call this morning also, we opened around 4 trades. 1 hit stop loss and the other 4 are still open in beautiful blue numbers, so that's really good, especially British pound New Zealand dollar is doing a great job there. So it's important to have around maximum 5 to 7 trades open at the same time. All right, other thing is that when you have like a Euro New Zealand dollar sell trade open, don't open other Euro New Zealand dollar trades. Open no other. It's good for everybody can learn a little bit of Dutch. From the same pair. From the same pair. Okay, so what does this mean? When you are analyzing Euro New Zealand dollar and you analyze the sell and you put the sell trade in there, but you are maybe analyzing on short term, it can be happening that on the long term, maybe a Euro New Zealand dollar has an uptrend, meaning that you want to place a buy. At that moment, you don't want to do that because having a sell and a buy in your account, meaning that you are hedging it, meaning that actually nothing happens because you are in the same trade for a sell and a buy. Now, hedging strategies are very good if you are doing them on purpose, but if you don't do them on purpose, really believe me, don't do it. So open no other Euro New Zealand dollar trades from the same pair, especially not buys and sells to each other. Also not don't invest in losing trades. What does this mean? When a trade is already in minus, let's say at this moment we have a silver trade from this morning session and it's in minus 4 euro at the moment. It's not hitting stop loss, it can go completely the other side. But sometimes you think like, okay, I have this trade, it's in minus now, but from this moment I expect it to go up. So I'm placing another trade from this moment to expect it to go up. Don't do that. Just leave it at one trade. You are taking the risk, you are calculating everything, so don't take more trades when it's in minus. Also, don't use stacking. So don't stack winning trades. Why not? What does it mean? Let's say here on the left we have a US dollar Japanese yen graph open. Let's say I'm going here for take profit 2. I'm going up and I want, let's say here I have a beautiful trade who's already in blue. Sometimes people say like, oh, I will buy another one till take profit 2. So let's take another trade. And then maybe I will take another trade to go to take profit 3. The point is why we are telling people at the beginning not to do that is because let's say it goes up to halfway take profit 2, something happens in the news and both of your trades go back to stop loss. then you are still losing double of the amount that you are normally losing when you have a new trade. So don't invest in losing trades, but also don't invest more in winning trades. Just calculate it one time. US dollar, Japanese yen, I want to do this buying trade. I want to risk 3 euros. I want to gain 6 euros and keep it like that. We have enough trades during the day to do enough trades. You don't have to do these kinds of things. So last rule is don't close minus trades. So when a trade is in minus, let's say our silver is now in minus 4.70 euro on my account from 1 o'clock this morning, and let's say our stop loss is 5 or 6 euros. I don't want to quit now. If I quit, I'm choosing to lose 4.50 euro. I don't want to lose 4.50 euro. I chose to take the risk of 6 euro losing for the gain of more than 20 euros. So if I'm closing now, I'm actually choosing to lose. So don't close trades in minus, give them the space. There's a reason that those stop loss levels are on those exact amounts, because they are support levels, which you can learn in the basics of IML Academy. So they are on a support level, and they're actually a little bit below the support level, meaning that we will get a resistance here, and that maybe just before the red line, it will go up again. So don't close minus trades. There's a reason that stop loss is there. But trades in profit, you can always manual close. If you have trades in plus, at this moment our British pound New Zealand dollar from this afternoon is in more than 7 euro plus. Maybe we are looking for 8, maybe we're looking for 11, I don't know it exactly anymore. But when you're saying like, well, I see this trade, I'm just happy with it, then you can close it. If it's 10 o'clock, 11 o'clock in the evening, you open your trades before you go to sleep and you see some blue numbers and you are happy with them, close them and sleep nice and dream about them. Like it's really good to just take the profit when you want to take the profit. I also have a euro Australian dollar for 65 cents in profit. Let's say I'm doubting at the moment. I can better take the 60 cents instead of losing 2 euro. Of course, I leave it open because I think it has much more potential. So it's just how you feel, how you trade. That's also the scary part, but just make sure that you don't close in minus, give them space, but if you have a profit and you like it, just close the trade, take the profit and go and drink a beer from it or something. All right? So that's about the little theory part. Now what we are going to do, we are basically going to go through the different trades, and we are going to see what we can find on Harmonic Scanner. And I'm going to check a little bit on the web analyzer also. Some web analyzers are like very, very short term. Now I see like a 1 hour trade here. It's a really nice potential buy. But I will explain also a little bit of theory, as this is the first English webinar. Okay. Let me save this one for later. Delete it for now. Okay, good. So what we are going to do, like just for you to know, if you go to imlharmonicscanner.com, you log in, you will see the last trade from any of the brokers that's at this moment coming up. For euro, Japanese yen, we see that this trade came. It's a 15-minute chart, so it's a short-term trade, and there's a bad pattern that's found here. So what are we searching for at the Harmonic Scanner? What we are searching for is there are two options. The scanner gives us the opportunity. At that moment, there are two things can happen. In this case, we see it goes up first, then it goes down again a little bit, and then we expect it to go up again. That's option one that we see. The second option, and I will use another color, is that the pattern actually goes a little bit down to the stop loss level. then it will go up again to entry level, mostly a little bit more, then it will go down again, and then hey, that's the sound of some new trades at the web analyzer. I don't know if you heard it, but it gives actually a nice ka-ching mode. It's very funny. All right, so these are the two options that the web, what can happen on the harmonic scanner. One option is that it directly takes off, then it will have a rebounce, and then it will go up again. This is a better entry point than this level, because at this level you don't know what's going to happen. This one can actually also really still go down. So what we like is to find a little bit better option than just trading everything. If you're a beginner, just feel free to trade everything on harmonic scanner. We have around 65–70% hit rate on positive trades if you just trade everything. But if you want to be a little bit more secure, if you like to find the good ones on the harmonic scanner, then this is the training that I'm going to give for you. So we see here, this is the entry point. Here's the entry price that software given us. It didn't actually hit it yet. You see here, point D didn't come down. Sometimes it never goes down, it just goes up from here directly. So this is entry price that software gave us. And there are like 3 take profit levels, take profit 1, 2, and 3. And there's a stop loss level. So what we say, mostly just go for take profit 2 level. It has the highest hit rate. Sometimes it just doesn't get to take profit 3 and it goes all the other side from there. So take profit 2 is a perfect point to take your profit if you are trading automatically. So this is a buy, like we want the US dollar, Japanese yen to go up. So what are the levels to start? This is a level that you can just start directly. When you see the pattern, you can just say like, okay, I will start this trade, and then it can go down and up, it can go up and then down and up again, or it will maybe go to stop loss. The stop loss level is there to take a little bit of risk to take more gain. Take profit 2 is mostly the double amount of the stop loss. What's a little bit more expert level? That's here. We are waiting for, in this case, to go up. You see here it's already retracing. Sometimes it's really going to 80% to take profit level 1. Then you wait for the retrace. At this moment you step in and you go out here, take profit level 2. What's the other thing that can happen? That it goes down further than entry level. Of course, you can start here at entry level when it crosses. You can go in here when it goes up. But what you also see is the same pattern as here, is that it will go up a little bit, it will retrace, and then this turn. Then this is the other very good option. So you will see in my other analysis, when I go through the rest of them, that I'm mostly waiting for this to happen, and then we start here, or it will go down, it will go up, and then we wait for the perfect moment to start and go further. So basically when it hits entry point again, or when it's around 50% to take profit 1. Of course, when you started here and this is happening, you have a little bit extra. That's very nice. Like this difference is around 14 pips, which is like you see here 140. It's 140 points. It's 14 pips. It's 1/10 of a pip. So 14 pips means around €1.40 for everybody with €100 account. It's around €1.40. If you have a €200 account, it's €2.80. And then you have €3, €4.60. So it's like you can calculate per €100, you make 10 cents per pip. So 14 pips is €1.40. So when you start here, maybe you make €1.40 more. But people here are almost secure that it actually is going that way. It will almost never go up and then go completely down. Of course, news can happen here, but this is a confirmation that it goes. Okay, what's the other confirmation that we are looking for? Is here at the bottom. You see RSI. And RSI is basically explaining when something is oversold or undersold. So when we are looking here to an undersold price, this means that it's less than 30% availability in the market. you will see here that it's undersold. So what's happened at that moment? The price goes up. Here we see an oversold price. Ka-ching again. Give me an arrow down. So here you see the price is at his high level. It's around 77% sold. So when that happens, you see here on top, the price needs to go down. You can explain this very easily with the price of an apple, or price of anything actually, but let's take the price of an apple. Price of an apple is around €1. Let's say here in the middle part, it's around €1 price. The moment an apple comes more than €2, like this 70% is maybe the €2 level, from that moment psychology starts that people don't want to buy those apples anymore. They will buy a pear, they will buy something else. So the moment that an apple becomes too high, the price needs to drop in the supermarket so that people want to start buying again. And here we are on the 50% level. You see also here in the graph that it's going a little bit up again. There are people that are interested in buying that apple again for around €1, €1.20. When the supermarket drops the apple price all the way back with the discount or whatever to under the 30% level, so it's like let's say they have a lot of apples and they discount them for 50 cents, then everybody wants to buy that apple. So there's a lot of amount of apples and there's a very cheap price, so a lot of people start to buy the apple, and by that the price goes up again. And you see that here in the graph, the moment it's undersold, there's a lot of people buying it, till again it's a little bit in the middle, and in the middle is when it happens that we don't really trade. When RSI is in the middle, we don't really trade. If you zoom in on this, you basically see that it's a sideways trend. Here we don't really trade. This is a sideways trend. It doesn't really happen a lot. So RSI is a very good, if you open IML harmonic scanner, RSI is always showing. It's a very good confirmation that something is undersold or oversold. So here we saw it's on 30%, it's almost undersold, so it was quite a good moment to just start here. Now it's going up, it went down a little bit, up a little bit. I would say this moment you will see that the RSI goes again under 30%, it's becoming undersold again, and from that moment it can take a really good leap up, and the same at this point. So use RSI as an extra communication. You also will see in the web analyzer, also here we have the RSI. It's a very important one. Here also you see an oversold moment and what's happening in the market, down directly. And it's still oversold, and then it's going down for the longer term, all the way till here. So that's how RSI works, and it's a very good way to analyze your trades. So enough theory for now. This is like a trade that's in this wave, so I'm not going to trade it yet. US dollar, Japanese yen, it's a good one. Even when you're on demo, don't trade it. It's almost 80% to take profit one. When take profit one is hit multiple times, or when it's like really on this level for a longer time, I see the pattern has expired and I don't trade it anymore. So this one is on the run. This is like a 15-minute. So if we calculate this, then it's around 7 hours. We are now 3 hours on the way. So in the next couple of 4 hours, we need to see if they're going to make this retrace, and then we can take the trade. Probably everybody's sleeping, so maybe we will see US dollar, Japanese yen tomorrow again. So shortly regarding those time frames. Again, if somebody has questions, just directly raise your hand, unmute your phone, give me a shout out, because it can be very good. I see in the chat one question, when the price is undersold, for sure the price is going up again. Yes, at the end, for sure, it needs to go up, definitely. This is a little bit longer graph, but here you see when something is oversold, that price is just too high. And you see that it's sometimes a very fast correction, or sometimes here it's oversold and it will have a longer time to go down. But at the end, the whole waves are up and down and up and down. And it's basically a whole psychotic pattern between oversold and undersold, oversold and undersold. And sometimes it's for a longer time in the range, and then we don't really trade. Like here, perfect example. It's in the range of RSI, and basically this is just one range. I don't know if I can count, if I can show it here. I don't have a block here, but like basically here you can show a block, and it's going up and down in that block, but this is a sideways market. So when it's a sideways market, we don't trade. We trade when there are long waves up, when there are short waves down. And here I can almost draw a new harmonic pattern by hand. If they can just give me a harmonic pattern. So here you actually can see here. So this is actually, this was already an harmonic pattern, and they are constantly coming back. And then the price goes up again, and then it's a longer wave, etc. So basically there's constantly activation on the market. When it's a real sideways market, we don't trade. Okay, good, hope that answered your question. So regarding time zones, the 15-minute trade are so-called pearls that we try to find. Sometimes when this is like a longer term 15 minutes, I see longer term because it's a lot of 15-minute candlesticks in here. Every candlestick is 15 minutes, so we see a lot of small ones. This is a long pattern. It's a pattern that took 6 days to create. It's very long for a 15-minute. So this one we already saw. If it's going down, we probably can take it and we can go up together with it. Mostly 15 minutes, they are called pearls because they are mostly already done. This one is quite nice. I zoom in a little bit. It's US dollar, Canadian dollar, and it's actually, it went down, it went up. So this would be the perfect second moment to start. We can wait a little bit for it to go up again back to that 50% between entry and take profit level, and then to go down. This is a trade that if you want to do it on demo, US dollar, Canadian dollar sell, you can do it. It's still in that 50% level zone between entry and take profit. Put your stop loss somewhere here, and you can ride the way down. For the real accounts, I don't like it enough. Oh, I got that on already. Euro USD. Euro USD, this is a good example of an expired pattern as well. It's a shark pattern. Shark patterns would go quite steep up from this moment. So it tested here the stop loss level a couple of times. You see that resistance level. It's trying to break through. And when it breaks through, probably the next couple of 15 minutes, like a couple of hours, it will keep going down. So when a pattern is not working, that's why we have a stop loss level. And you see that stop loss level is quite strong, but then it can break down. You don't want to be in that trade here anymore. So you saw here, it didn't went up, it went down. Then we are waiting to really go up, going through entry level, and it never did. So this trade, if you finish the trainings, nobody should be in this trade. Let me check if I can find another 15 minutes. Now, this is a good one. It went up straight. It didn't retrace at all. So when you started the trade directly, you had a good trade. When you were waiting for confirmation, you're probably not in there. And that's like the price to pay for security. If you directly go in, this one was a beautiful trade. Take profit 1, 2, and then 3, basically in just 2 hours from start. This was like the first hour, and in the second hour, 1 hour, 30 minutes, basically you already hit take profit 2, and take profit 3 was hit after 2 hours. So this is a beautiful trade. If you just start every trade, if you just start directly when the pattern is happening, I will change it to, let's put it at London time. So Dutch people calculate 1 hour more, Lithuanian people 2 hours more, UK people, this is your time. So at 1 o'clock London time, this pattern arose, and like 2 hours later, it was on take profit 3. It didn't get any retracement levels, maybe this one, and then you got in here, but like other people that are looking for security first, they were probably not in the trade. So good job if you were in there. I will check if I can find the Euro USD that we had this morning, because it's still a very good trade to do. Let's see what that Bitcoin trade did. That went right. Okay, so here we had Bitcoin trade. It was from tonight, like this night, 1:45. And actually it was here testing that stop loss level, testing the entry price, going down, up, and then really breaking to take profit 1, take profit 2, back to entry, second entry level. So it means that the pattern was found twice. A very nice moment to ride down to take profit level 3 and again. So here's a good example that we also are trading Bitcoin. Harmonic Scanner is finding Bitcoin patterns already as well. So I'm just moving on to XM for a second to check if we can find that Euro USD. Yes. Okay, so this is a trade that we started this morning. It's still very accurate. It's on the 15-minute mark, but it's a long term. You see a lot of, it's like a 5-day pattern between C and D. So it can take up to 5 days to also go back to take profit 3. Shark, not the steep shark in this case. So this is a perfect trade for everybody who is not yet in the trade. Let's calculate this one. We are going to start here. The line is your entry point, and let's make a long, and let's edit it. And we go for take profit 2, and what I'm doing now is I'm calculating. You don't have to do this when you're using Harmonic Scanner. You can use this stop loss level if you are with this entry point. When you're with this entry point, just use this entry point as a stop loss level. What I'm now doing is I'm checking with this graph here. You can say, okay, I want to enter long position for a buy or a short position for a sell. And then you can like play with this field. So I'm putting it now at like take profit 2 level. And it's giving me that we are going to make 1,550 pips. Sorry, 1,550 points. So 155 pips. So how much do I want to risk? Like here we are risking, we are gaining 0.83%. And what do we want to gain? So I'm going to that edit button. I'm going to coordinates, and here you see like we are looking for 100 pips going up, and we are all right by risking, let's say, half of that, 50 pips stop loss. So if you're trading with a €100 account and you trade with 0.01, this is a €5 loss with a €10 profit. So now you see here the stop loss level that I just created from the time of trading for €55 loss to €10 profit. And take profit 2 is actually €10 profit. So it's this green one. I will put it in text. Give me text. Okay. So we are going to start a Euro US dollar. It's a buy. And the stop loss is 1.18730, and the take profit is 1.20224. Sorry, 230. I'll make a nice screenshot of this. Hoppa. Why is this €10 and €5 risk? Like you can maybe say like, wow, €5 risk quite a lot for €10, but this is a quite long trade. So the trade's already going. It's going already a little bit up from entry point. Like this is a really nice one and was already showing this morning, and it still didn't go down or whatever. So it's quite a good trade. No questions, then we will move on to the next one. Okay, let's see. Other trade that we were in this morning was silver. I just want to shortly check. This is a gold trade. Gold's going up. It went up, it went down to this level, started down, and it's going up now. It's a little bit late to start. Very important, if you are trading gold, silver, or oil, always trade with 0.01 lot. If your account less than 1,000 euro or USD or GBP. So this is very important. Why? Because the calculation, how much you trade with gold and silver, how many pips and how many a pip is earning you is different than on crypto, than on normal currencies. And so just know that this is what you, when you have a small account, just always trade small lot size for this one till you are trading them more. So if you want to trade a gold trade for now, it's quite a nice ride up. It's actually already going up. I'm not going to wait for a second retrace. So we can actually ride this one till take profit 3. It's quite nice, and we can make this a long position starting here. And we can calculate how much we want. So let's say we are going for 500 pips and we are risking the half of it. And this is quite a good price to trade. We can put it a little bit up, 1900, 1300. And we don't want to give it more space. You don't want to go into this trade. If it's going to the stop loss, that's it. Like if you're not sure about trading gold, silver, oil yet, just keep it like just skip this one. But silver is going up. You can guess that gold is quite connected to that, because basically it means dollar is going down on silver and gold. If you see things like wheat and other stuff, and I mean not the Dutch wheat, but like wheat as in the grains where we bake bread with, don't trade them at all. They're way too big for your accounts. So gold, silver, oil are the only 3 ones that you can trade outside of cryptocurrency with small accounts. So what's this gold trade? Let's go for it. We are looking for XAU USD, and in some traders they just call it gold. It's a buy, and a stop loss here is 1309.891. So it's here on the red. That's what like this thing created. It's on the red, and here on the green, take profit 1390. .000. All right, that's a gold trade. Very nice one. Take small lot level. If you are in demo, definitely take it. It's cool. Just with demo, just experience a little bit. It's a very nice one. Okay, I don't see any questions, so I just move on. We wanted to look at silver. Just clicked on gold. Here we have silver. No, it's gold too. Sorry. Where is our silver trade? XAU. So this is a nice confirmation. He found it on the 1-hour chart, and he found it on the 4-hour chart. And on the 4-hour chart, it's going up already, and it didn't even gain back. So it's very nice if the software finds it on 2 different levels. I can show you here as well. Here's like US dollar, Swedish, how you say it in English? The crown of like CSF, and it's finding it at 1 hour and at 4 hour. So it means that if they both show a buy or they both show a sell, then it's a very nice confirmation that it can possibly happen. So our silver trade here is gone, or maybe it's here. No, it's also XAU. So even XAU gold is found on the 15-minute trade. It's a very small one. It actually went to stop loss, but after that it went up from here. But it's actually another confirmation that the chance that it will go up. You see, we will go to 13.19 all the way here because we are on a little bit longer term trade. This is a short term trade. Okay. Let's see what we else have. We had like GBP New Zealand dollar, GBP New Zealand dollar this afternoon. GBP New Zealand dollar. Let's check where we found it. I don't see it here anymore for now. GBP 50 minutes maybe. No. Okay, GBP New Zealand dollar I can't find on the scanner so fast, and it's also already gone. Like I see at this moment it's in plus 10 euro with me since 1 o'clock, so it's a really nice one, and you can just close it. Question from Vincent: how do you close by yourself a profit trade? So you go to your trades and you just click on the trade and you'll hold it a little bit longer, and then a short menu opens with the option to close, modify, or make another trade, which we discussed to not do. So you can click on close, it will bring you to a new screen, and it will give you the actual amount at that moment. And it says close with profit and then this amount. If you click on it, you close it. And that's the moment you actually take the closing. So if you want to close something, go to the close screen, and then you really click on the button. The price that you see there is the price that you are actually seeing when you're closing it. Other small update on silver. I told you at the beginning it was minus 470. People are maybe at that moment doubting to close. That's what the rest of the world does. If you don't close, now it's on minus €3.90. So it already went up 70, 80 cents, and it's a small trade. We are trading small to show you what's like real, not to trade with 10,000 euro. This is a real account. And then it's like on minus €3.90, and maybe when I wake up tomorrow, it's on plus 10. Maybe it's also on minus 8, but this is like a great thing about holding on your minus trades. Okay, let's try to find another trade. This one is expired. This one actually didn't do. It was like it hit stop loss, like it was very close to stop loss. It hit stop loss again. It went all the way through. At the end, now it starts to do its pattern. Way too late. Don't trade those trades. This one we were waiting for the trace back. US dollar, Canadian dollar. Do we have that one already? No. You see here from price moment, actually it dropped. If I start here, actually from here it dropped in the same moment it found the graph, it dropped here. Then it went up and down and it closed here. It started, it went up, went back, and started the downfall. So basically what you can see here is it went from here down, it went to the top of this one, and now it starts to go down. So it actually made that move. It's still a very small one, but this is a good one. It made this little confirmation, and from here, expectation is that it goes down. It's still around that 50% to take profit 1. It's worth it to go for take profit 2. Let's just calculate it first. Oh, that's not what I wanted to do. Let's just calculate it for a second. From here to take profit 2, we are talking about 30 pips. So that's a €3 profit level. It's quite low. So what you can do is you can say, okay, let's trade this one to take profit 3. Take profit 3 here is at 60 pips. So it's €6. So let's put this one at take profit 3 and our risk next to that. So here now we are going for a short position. We are looking for 60 pips, take profit 3 level, and then next to that we want to risk from 600 points, we want to risk around 300 points. So the 300 points are around here. I can also edit it. I can make it like super precise, 300, 600. And this is where we are now. This red number is the number that we're going to use for stop loss, and we can just use this take profit 3 level or this exact number for €6 profit per 100 euro in your account if you trade. So here we go again. We are now on a US dollar, Canadian dollar, and it's a sell with the stop loss 1.24875. This number is like this line, and a take profit of 1.23982. I'm just using the harmonic scanners to take profit. If you're on demo, do it. If you're on a real account, you can definitely do this one too. That's trade number 3. We are already more than 40 minutes in the call, so I'm just going to try to find maybe one more on the harmonic scanner. If we don't find it, then we are going to move on. Ah, this was a nice one, all the way up, and now going down after hitting take profit 3 times. We are probably going to move over to the other scanner. There's not something special here anymore. So what you see, like maybe it looks like a chaos, but I remember like the pairs that we already did, and the pairs are in like the different brokers. They are finding the same patterns with the same data. So sometimes not, but sometimes they do. And like you can just remember we just did US dollar CAD, so then I'm not clicking it on this one, and I'm just going through the list indirectly on the different brokers. See if they, this is also US dollar CAD, so it's also found at GFAX, very big broker, very good. New Zealand dollar CAD, already run out, going through, so this is a very long one. Normally Gartley takes a long time, but this is a really long time to go to take profit 3, but you see it at the end, quite a nice one. This is a perfect example, up, down, entry point. We don't start here, we wait for it to go up, we retrace it, and we start here. Then later, if you see this happening, start here, no problem. You see it going down, you wait for the first blue candlestick, it goes up from here. This one I wouldn't do anymore, why not? It hit the take profit 1 so many times, this is actually a whole sideways pattern. So if you are starting here, you're very bold, maybe do it on demo, but like this is your first starting point. This is maybe a nice option when you see it's going up. This is a very considerable starting point. After that, don't do it anymore. Trade is expired when it's too long on take profit 1. Even that it can go up, just don't risk it. It can be the maximum here and go down from here. I saw that many times. Okay. So very shortly, I want to cover some things in the Web Analyzer. So what's the Web Analyzer? Web Analyzer is software for short-term trading. It's actually not for trading for the long term. You can make stop losses and take profits for like bigger trades, but those trades are mostly found on the 5 minutes or 15 minutes chart, meaning that they are just staying for a couple of hours, not days. So I'll just take a sip of water. And let's move on with this one. So what you see here on the right, everybody who's IML customer, you can just go to imlwebanalyzer.com. You can log in, and there's here education button. It's a very nice one. I know you don't see it yet, so I will put it here. It's webanalyzer.com/edu education, and here are some videos that you can definitely see. Don't skip them. First, intro videos, how is the software working, and then very nice strategies. And in those strategies, you will find a ninja strategy that I will shortly explain. And there's also a Lin and Nick strategy together with RSI and MACD. So I will explain those two shortly to you, but be like, just watch the videos, be smart. So they are behind the button of education here after you logged in. Also very nice, there's a web analyzer, telegram.me. You are all on the Telegram for IML already. So just go to the telegram.me web analyzer. And what it does, it gives you all the time a message when there's a new thing. You can mute the channel, but when you're active trading, when you're behind your laptop, just put it on. And you will just get the message pling when there's a new one. Like maybe you could hear this one too. It was like ka-ching every time when there's a new one. This is like 30 seconds ago. Like you get the message. Why is that important? Because for the ninja strategy, it's the first one. That's meaning you take your phone right now, you take New Zealand dollar, Japanese yen, and you buy it. You don't analyze, you do nothing. Ninja strategy is all about taking the trade now directly and go for a few pips up. So let's just go for like 5 pips up, 10 pips up, and close the trade. You make 50 cents, €1 per 100 euro in your account. It's a very small strategy, and you need to give it actually 15 to 20 pips of stop loss level. So you will lose some of them 4 times more than that you gain them. But the point of the option of gaining here is much more chance that something goes 5 pips up than that something goes 20 pips down. So it's a little bit difficult one to understand in one session maybe. But the whole point is that you already see it's going up here. So if I even put it on the 1 minute, you see here, this is when the web analyzer gives us the ka-ching, and hop, there it goes. It's a very small one. We are just looking for 5 pips. I don't actually know if this is showing me in points. Yeah, it's showing me in points. So we are actually just looking for like 5 pips. Like this. And on the 5-minute chart, it's just from the bottom of this one, 5 pips up. Hop, 5 pips up here. So it's a very small move, and this small moves is just happening all the time. When you take the small moves, those are created by automatic software. They are doing a lot of analysis. Here it probably just gave it because it's undersold. Strategy gives it low as well. So at this moment it's going up from here. It can just go 5 pips up. Sometimes it goes a little bit down and then it goes up. Then you will hit it for the second option. So this is ninja strategy, but it's a trade that you cannot let go. You trade it now. You keep looking at it. When it's like at 50 cents, €1, you close it. Nice amounts, and that's it. It's a very short-term strategy for 5-minute trades. You can also put like 15 and 1 hour. You can take it off, so you just have the 5-minute trades. You do it directly, and then you wait for it. So what I like more is a little bit more analytic option, and that's let's take the same one. So what we like to check to really do this buying trade for a little bit longer time. Okay, it's a great trade because at this moment it is undersold. It was undersold. And probably it will go maybe down a little bit more. Where are we waiting for? We are waiting for MACD to cross. So we are not using Stochie at this moment. We are just using RSI and MACD. That's all you need. You can close the Bollinger Bands. You can say, okay, I don't want the MA. Maybe you don't even want the volume. Just close what you don't need. Like this is a moving average. Maybe it's nice. You can even delete that one as well. So what are we looking for? We are saying, okay, this is a buy. It's called here at the beginning of this graph. Is it really undersold? Like really in the white space, or in the white space on top for a sell, and the white space at the bottom for a buy? Is it really in the white space? Great. Green light, green flag. Then other one is here a crossing. You see here, price goes up for a long time. Price goes up here. Price goes up for a long time. And then when the MACD is crossing, we wait for it to go down. So what you see here in this example, it's like we don't go in here at the sell. It's not the top moment. We wait for the confirmation a little bit later. that the trend is changed to down. And from that moment, we go in and we wait longer. It's the same as on the harmonic scanner. Sometimes we have a little bit of patience before going in a trade. This one maybe go up from here, but I'm waiting for the MACD to really cross. And when the trend becomes up, we go in the trade. So for that, we need to look to a little bit older trades. I'm still taking 5 minutes, 15-minute trades, and there are good examples. So what are you doing? You are see here in local time, very nice. They added it recently. They also recently added the time passed, so that you don't even have to calculate anything. But the graph is still all the time in UTC time. So this one is called 25 minutes ago at 18:30 UTC. So you search for the trade, 18:30 is where I'm using my mouse now, and it's called it at 19232. So 19232, actually here, at the bottom of this green one. I can maybe zoom in a little bit more. Here, 232, here exactly. This is the moment that they said, okay, potential buy. Did it go up from here? Yes. Was it at that moment undersold or oversold? No, not at all. It's here in exactly the middle. Basically, it can go up from here, it can go down from here. This is a red flag. I wouldn't trade it. Was it an uptrend? Yes, it was an uptrend. We already had the crossing. Lines are quite far from each other. That would be a green light. Still, I wouldn't trade it. It's in the middle of RSI. It can go up and down. You don't know it. So what I'm doing here is I'm looking for multiple confirmation. This is confirmation number 1. It's automatic software and automatic scripts. But next to that, I'm checking undersold, oversold. You can also check Stochi. Here, it's actually on the top. Again, it's another theory. We don't use it for this one. So it's going up. Yes, it's going up. And then when the moment it's oversold, it will go down again. But when they called it here, it was an unclear moment for me. So you wait, like you wait for it to be undersold or oversold. They don't do this trade. Let's take another one, New Zealand dollar, Japanese yen. It was called at 1820. 1820, here we are. And it was a buy signal. So you see from here, maybe in long term it will go up, but it went down first, and now maybe it goes up. So at this moment, 1820, you see again, she comes back every time. 1820, you see here, it's not undersold yet. So I don't want to buy this one. We want to wait till it's undersold. That's a nice moment. Then, when it's undersold for a little bit longer time, it maybe goes up from here, meaning you already see lines coming closer. It will cross. When it's crossing, the price will go up for a little bit longer time. That's the moment that on this software, you actually need to calculate your take profit and stop loss level yourself. So let's say I want to do a buy from here. I don't do it because it didn't cross yet, but let's say I'm doing it from here. I'm adding this take profit and stop loss level. I'm zooming out a little bit. I'm clicking on it. I click on edit. And let's say that you want to look for a 30 pips or maybe even 50 pips. So 500 points, 50 pips, take profit. And you say, okay, I want to go for 25 pips stop loss or 20 pips or 30 pips stop loss price. So then you need to zoom out, and it looks like a huge move. That's why we want those confirmations. Because if I'm doing this and I'm looking to a 15-minute or a 1-hour chart, like this is what we are normally trading, like this can be a new trend. It can be a reverse and it can go up, and then it goes up to this level again. And here you see a resistant level. That's why mostly those 50 pips or 30 pips, this is your 30 pip resistance level. That's a very, very nice amount to gain. You don't have to wait for take profit to hit. When you're happy with your profit, we talked about this, close it. So this is your price. And then here appears your take profit number, and in red, your stop loss. So when something is undersold, when MACD is crossed, that's the moment to go in a trade. Calculate it yourself, put here on the right, long position or short position. This is a long position we want to buy. Short position is for a sell. You edit it to, let's say, 50 pips profit, 25 pips down. You can also do 30 pips take profit and maybe 20 pips take, don't take less than 20 pips. You need to give it some space. So here we are talking about 50 pips. It's actually around €5 and minus 250 for every €100 in your account if you're using the 0.01 lot per €100 in your account. Okay, looks like that we are not directly having another trade here. I will, without theory, just check a little bit if we can find one more trade in our system here. Let's check a euro, Japanese yen, potential sell. I directly see RSI, no, not yet. This one was like 2 hours ago. 2 hours ago. Was a potential sell. Yes, little bit. Here you see there's 5 pips, take them. This is ninja strategy. Take 5 pips down, take your profit. Very small trades. It's going up actually from here. MACD crossed for making an uptrend from here now. So another trade as well. So this is something that I can just tell everybody, start doing the small education. This is a nice one. It was undersold. MACD is going to about to cross. And now I'm going to check our trades because are we not in this trade yet? No, we are not in this trade yet. So this is a trade, it's on a 5-minute chart. It's a very small one. So I'm going to add it for educational purposes. You can do it on demo. I'm going to do it on real because I'm seeing crossing is coming and I'm expecting an uptrend from here. It was undersold, it's going up already. So we are going to put a long position from our current price. And I'm actually looking for around 30 pips. It's a small one. I'm risking, so I'm taking like 2 euros. Let's make it 4 euros. 40 pips, €2 risk per €100 in your account. If you are trading 300 euros, trading 300 euros account, it's 3 times more. Put it on a little bit larger scale. It's an uptrend in the long term. It was a nice retracement. And we expect it from here to go up a little bit later. Okay, so I cannot do text in here. So I will just name the numbers and type them. I will type them later in the WhatsApp chats from the Netherlands and the Facebook chats from Lithuania as well in UK. So we are talking about New Zealand dollar, Japanese yen, and we are talking about the buy. And our stop loss is going to be 80.491. And our take profit is 81.091. So just 4 trades in the session of today, but we already had some from the morning. So I want to leave it for that. I'm going to put the 5 trades in your chat so that everybody is able to take them as well. And also the other members that couldn't be at the webinar, but they still are able to do the trades. And I want to thank everybody for being here. Are there any questions? I will just stop the recording.